ECB, considering public blockchain. For digital era as Japan, us, and China compete in the new financial era. Hello, dear subscriber and guest. The clock of global financial history is ticking faster than ever. Imagine waking up in a world where physical money has been replaced by digital currencies issued by central banks, circulating not only on private networks, but also, possibly, on open blockchains like Ethereum and Solana. This future, which seemed distant, is beginning to take shape before our eyes. The European Central Bank is about to make a decision that could redefine the global economy. Meanwhile, Japan is moving forward with stablecoins and tokenized assets. The United States is signaling interest rate cuts. The Middle East is reinventing itself in credit and energy. And even emerging countries are announcing new digital currencies this month. Stay with me until the end, because today we'll connect these dots and reveal what they mean for humanity's financial future. The ECB and the digital euro. The European Central Bank, ECB, is leading the final phase of preparation for the digital euro. Until recently, the official narrative was simple: a closed, controlled, and secure system designed for citizen and corporate transactions, without relying on blockchain as its core layer. But a recent report revealed that the ECB is considering something many considered unlikely: allowing representations of the digital euro on public blockchains like Ethereum and Solana. This shift in perspective occurs because private networks raise a central concern: a lack of transparency. If citizens believe their digital money is subject to total monitoring, without minimal privacy, trust could crumble even before launch. With the digital euro on open blockchains, the possibility of licensed custodians issuing tokenized versions of the digital euro would emerge, interoperating with the DeFi ecosystem and private sector tokenized assets. This model would bring benefits, but also risks: dependence on intermediaries, exposure to security flaws, and the dilemma of governance in permissionless networks. The ECB already collaborates with around 70 institutions, including blockchain companies, but this doesn't guarantee that it will truly adopt public blockchains. We're more likely to see a hybrid model. The digital euro's foundation will be private, but there will be regulated bridges to open networks. The deadline is clear. In October 2025, the ECB's governing council must decide whether the project will move forward, and official issuance will only occur after final approval of the European Union's legislative process. This debate reveals a clash of views. What is more important, state sovereignty or global interoperability? The answer could define Europe's role in the new digital economy. Global comparison: China, the US, and hybrid models. While Europe debates, the world isn't waiting. China's digital yuan is already circulating in several provinces, with millions of tests carried out. Although it doesn't use blockchain at its core, it incorporates smart contracts and allows integrations into permission networks. The model is centralized, but functional. In the United States, pressure is coming from the private sector. Companies like Circle, with USDC, and Ripple, with RLUSD, are already moving billions. The US Congress passed laws creating a clear regulatory framework for stablecoins, solidifying the country as a benchmark in this segment. Thus, we see two opposing philosophies: China, state-run, centralized, and controlled digital currency. US, private, supervised stablecoins, but with room for competition. Europe needs to decide whether to follow China's lead, adopt the US model, or create a hybrid path. In practice, the digital euro will likely be closer to the Chinese model, managed by the ECB, but with limited openness to interoperate on public blockchains. This decision is strategic. If the digital euro doesn't connect to the tokenized world, citizens and businesses may prefer to use global private stablecoins, leaving the official currency in the background. Japan, SBI, tokenized RLUSD, and RWA. While the West debates and the East centralizes, Japan is taking firm steps to become the global hub for regulated stablecoins. SBI Holdings, Japan's largest blockchain investor, in partnership with Startail Group, announced a 24/7 platform for trading tokenized stocks and real assets, RWA. This initiative breaks with the limitations of traditional markets, which operate only at fixed times and by region. Furthermore, SBI has become the first Japanese company licensed to distribute foreign stablecoins, starting with Ripple's RLUSD. This move is strategic. Ripple already has a strong presence in Japan, and now its stablecoin will be legally circulated there. SBI's goal is clear: to position Japan as a global hub for stablecoins, regulated. While Europe and the US are still discussing legislation, the Japanese are implementing practical solutions. This progress has a direct impact on the Japanese tokenized real estate market. which already generates more than $1.3 billion in issuance. Block 4. Fed and Monetary Policy Federal Reserve Chairman Jerome Powell set the tone at the last meeting. The U.S. economy may be close to receiving an interest rate cut. Although he did not set a timeline, Powell acknowledged that conditions already justify adjustments. This move, if confirmed, could inject new global liquidity and increase pressure on the ECB and other central banks. For the markets, Powell's every word acts as a trigger. Companies adjust investments, currencies fluctuate, and growth expectations are reshaped. The impact is not limited to the U.S. With lower interest rates, emerging markets may see capital inflows, boosting the value of local currencies and stimulating investment in digital assets. Iraq in the Financing Guide. In the Middle East, the Central Bank of Iraq launched a financing guide for small and medium-sized businesses in partnership with international agencies. The goal is to simplify access to credit, reduce bureaucracy, and strengthen confidence in the banking system. This initiative marks a turning point for the country, which seeks to move away from exclusive dependence on oil and expand private sector participation in its economy. Energy and ExxonMobil. On the eve of the Alaska summit, Russia surprised by paving the way for ExxonMobil's return to the Sakhalin-1 project. This is one of the country's most strategic oil projects. The gesture, however, comes with conditions: capital reinvestment, supply of Western equipment, and pressure from Exxon for changes to the sanctions regime. This episode shows how energy and geopolitics remain intertwined. Countries that announced digital currencies in August. Besides Europe, Japan, the US, and China, other countries took decisive steps this month. Nations in Africa and Latin America have announced pilot programs for digital currencies and tokenized assets. Nigeria, which was already testing the Naira, announced integration with mobile payment platforms. In Brazil, the digital real has entered an advanced testing phase, with banks and fintechs simulating real use cases. And in Central America, smaller countries are studying the tokenization of government bonds as a way to attract international investment. This mosaic shows that the transition to digital currencies is not limited to large financial centers, but a global phenomenon. We've reached the end of this special edition. We're grateful you've stuck with us this far. Today, we saw how the ECB evaluates public blockchains for the digital euro, how Japan is establishing itself in stablecoins, and how the United States, Iraq, and Russia are moving their pieces on a global financial and energy board. We also saw the adoption of new countries into digital currencies and tokenization. Everything points to the same destination. We are entering an era where currencies, assets, and contracts become digital, programmable, and global. Congratulations on being a unique person. This makes it easy to identify your interest in this silent and gradual financial evolution and change, where the dots truly connect. To continue receiving these analyses, subscribe to the channel now and activate the bell. Every day we bring you information that the mainstream media misses, so you're always one step ahead.